Happy summer, Maverick traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and this is the Currency Room. We are now in I guess this is the fourth week of June, so we are going to be closing the books pretty soon on June, so we've got basically a week and a half left to add to any pip count. In this session, we're going to be talking about what happened last week. We're going to take a look at the broad markets, commodities, then we're going to try to forget everything we thought last week and look at this market with a fresh set of eyes with no biases, scoring everything from +3 to -3. Then we pair up the strongest versus the weakest, and those are our trades for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Let's start off with what happened last week. So we got a little bit of a pullback in equities. It was sort of strong the first part of the week, and then we sold off in the end part of the week. Look, it was just a pullback. We'll take a look at the S&P here in just a second. Yields are basically just stuck in the same range they've been in. We did have two central bank announcements last week. We heard from the SNB, who cut rates by 25 basis points. So they have now done 2 rate cuts. So they are definitely the most aggressive of all the central banks right now. And cryptos could not break out. I'm going to show you a long-term chart of things like Bitcoin and Ethereum, and you'll just see we have been knocking on the door for about 8 months at these certain levels, and just it failed miserably this time. The big question is, does it need to cool off, or is it just pausing to finally get that breakout? We'll take a look at those charts as well. As far as economic news goes, we actually had 3 central banks. We had the RBA come out. They kept rates steady as expected. U.S. retail sales weaker than expected. We have seen a little bit more softness in the U.S. economy than the numbers have estimated. What that means, it's not really affecting anything right now because the stock market is still looking very, very bullish. I think the stock market is saying the Fed's going to see that the numbers are softening. They're definitely going to cut. We heard from the SNB. They lowered rates. And then we heard from the Bank of England. And no one really expected the Bank of England to cut rates because they were right going into an election right now. And I want to kind of talk about that because I want to take a look at the situation in the United States. We're going into that election in November. If the Fed's going to cut, they really need to do it in the next meeting, which is late July. I think that's where we're going to get our 1 rate cut for the year. And again, it's just like the Bank of England, they couldn't cut before the race because they didn't want to be seen as political. Once the election is over, I bet we're going to see Bank of England come out and cut rates as well. Other than that, there wasn't a lot on the table. We did get some weaker than expected manufacturing out of Europe. That was really about it. But overall, really the central banks led us higher. Okay, what do you think about that second Swiss National Bank rate cut? And what does that mean for the Swiss franc?
I mean, I think this is definitely, like you said, it's aggressive. And I was surprised, if you look at the expectation was not to cut rates. So the fact that they did is a bit of a dovish sign. And I think this is where we are in this cycle for monetary policy. And I think as some central banks get a little bit more aggressive, that's going to drive those currencies lower. Remember, if you look at it, Swiss franc is one of the best currencies in the last 2-3 years. I mean, this is amazing, performance that we have seen. So I think that's just a way to bring it down, and I think that's something we've got to note because this is policy divergence will bring some of these currencies to appreciate and depreciate, and I think Swiss franc definitely have a lot more room to depreciate than appreciate. So I think I like the Swiss franc more to the downside, along with the central bank turning more dovish. So that's really where we are at.
I think you are exactly right when you said the central bank is doing this specifically to push the Swiss franc lower. I think that is their whole goal, is to push the currency lower because their higher currency has definitely been hurting their economic numbers. Let's go in and take a look at the numbers for last week. We'll close up the week and then we'll take a look at the week ahead. As you can see, we had a basically flat, let's call it flat, slightly up, slightly down week on equities. Crypto, like I said, hit those levels and just failed spectacularly. I mean, it was a very, very bad failure. We'll take a look at the charts here in just a second on crypto. Here we are on the S&P, and look, this is just super bullish. We had high base, breakout, little base here. We had a run. Okay, this candle's not a great candle. Gap up, close below. This is a bearish engulfing candle. These are typically little candles that tell you, hey, it needs a little pause. We just need a little pause, and so I think we could easily get a pullback. The first area I'm looking for in a pullback is this probably 54.10, right around here. We might come down to this 54.41 and bounce there. These are the levels I'm looking at, and you can see it's still a mile away from the 20-day moving average. We could even pull back to the 20-day moving average. I just don't see the selling there right now in this market. I think there's not a lot of reason to sell currently. If we take a look at the returns in currencies, surprisingly, the Swiss franc was only the second weakest currency. Take a look at that yen. That yen got hammered. We have liked the yen short for quite a bit. The only worry is Bank of Japan intervention, but as of yet, they have done nothing to stop this yen slide. You've got to just stay short the yen. I like being short the yen during the US sessions. I think that is my favorite time to be short yen. But also Swiss franc, we'll take a look at these charts. Best currencies, Aussie and CAD. Aussie probably got a little reaction from that RBA, no rate cut. But as you can see here, this was not a great trading week. When you take a look outside of the yen, a lot of things were basically just flat on the week. So we need to take that into account as traders. I've always said it's just as important knowing when to trade than it is knowing when not to trade. Cash is a decision. Cash is a choice. And we want to be trading more when there's strong trends, strong movement. We love to see on a weekly basis multiple currencies up and down more than 1%. As you can see here, the yen was really the only game in town last week. Other than that, it was pretty slim pickings for Forex trading. And here we have the performance in the cryptos. They just got hit. They just failed at those points. And anyone who was buying and hoped that they were going to get the breakout this time, they saw they weren't going to get it. They took profits. We'll have to take a look at those charts and see, how long it's going to take for those to possibly break out to the upside. All right, so we took a look at the S&P. I want to take a look at bonds. Now look, these bonds are really driving the US dollar and they are driving the US stock market. They love the 4.2%. 4.2% is a great yield at this point. The equities really like this. And not just this 4.2, but you can see this is a low base pattern. We're probably going to go lower in yields, which should help bring that US dollar down a little bit and probably gives equities a little bit of a boost. I'm looking at these yields thinking we're probably going to go lower. Look, I don't think we're going to go much lower because, remember, people buy bonds when they are worried about economic growth. I don't see that worry out there right now, so if we do get a drop, I don't think it's going to be much, but I just don't see the case for rising yields here. Ankit, I know you trade bonds a lot. What are you looking at in the bond yields?
I mean, I think it's the same thing. I'm not looking for these yields to rise. I think they're likely to stay where they are. One of the things that I've kind of talked about recently as well is where we are in the monetary policy. Since some central banks are turning dovish, and where we had the FOMC just 2 weeks ago, and they were not as dovish. So I think that's really what keeping the yields where they are. But again, like you said, that's a good point as well. Is if what if ahead of ahead of the elections, if they do cut rates and a surprise rate cut, I think that is going to bring the yields down. So I think with where we are in this economic cycle, we're not really looking for higher yields, but we're looking for either a hold of that range or breaking lower. So I think the better bet here is more on the downside than it is on the upside. Inflation is easing everywhere you look at it. So I think that is just behind us. I think the biggest thing is on the rate cut cycle, which is definitely for the US seems like a little far distance than other central banks. We have Bank of Canada, its closest trading partner, cut rates as well. So I think as the other central bank cut rates, we might see that divergence, and maybe this is the last one to fall. So that's my outlook here.
Thanks, Ankit. And I agree. Whenever you look at central banks, remember it's not. I always give the analogy of, like, let's say there's a really good house on the street. Let's say you go look at a house, you want to buy it, and you think, oh, that's a nice house. It's a 3-bedroom house, 2-bath. And then you look at the rest of the neighborhood and it's all mansions. Well, if the rest of the neighborhood is all mansions, that is the worst property in the neighborhood. It could be a beautiful property, but it could be the worst in the neighborhood, and it's going to be selling for less. Same with the vice versa. So when we take a look at what central banks are doing, we have to keep in mind what all the other central banks are doing. Right now, the FOMC is kind of at the end of the line. They are the least likely to cut rates compared to all the other central banks. It's why we're seeing that dollar hold up a little bit better than some of the other currencies. Here is the chart on crypto. I'm going to show you a longer term chart when we take a look at Bitcoin. But this is basically a base that's been forming for 7 or 8 months. And this was the potential breakout point. And you can see we failed, and then we came down to the support line. And I remember doing a video saying, this is not the kind of bounce action you want to see at support. And sure enough, it sunk below it, and you can see there's just no buying. It's just a stair step down here. Are we going to find support here at this line? Again, this is the crypto basket. This is all for the major cryptos, equally weighted. We'll take a look at all the things individually. But there's no question that the momentum on cryptos is to the downside right now, and there's no reason to think it's going to change until we find that support line and put in at least a couple candles, maybe a swing high and a higher swing low before we can really get bullish on the cryptos. On the calendar next week, we've got Canadian CPI on Tuesday. If you're looking to trade the CAD, you want to make sure that you are looking at that. We also have Australian CPI. I really like this Australian CPI because the RBA, we heard from last week, again, the Aussie went up, which tells you that, hey, people are thinking the RBA is probably more closely aligned with the Fed in America than they are with the SNB. They're going to be a little bit later on cutting rates. If this number comes out hot, I really like that Aussie on the long side. Other than that, we've got the core PCE price index. Take a look at those numbers. It's looking to come down again. The numbers we got last month eased considerably. Here we are at 0.1% month over month. Again, if these numbers keep coming out like they are, I think the Fed can signal victory on their fight of inflation and start to bring down rates. That is going to, again, if this number comes out weaker, I think the dollar starts to soften more so than it has been lately. Again, I don't love the dollar as a short here because I think there's other currencies with central banks that are going to be more aggressive. But as we get more of these lower numbers, I think we are going to see a little bit of softness in that dollar finally come into play. But like I said, I'm not looking at that now. That's going to be down the road. Equity markets, we're in a pullback, but we're bullish. This is just a pullback or a base. We don't know yet. No central banks this week, and just a few CPI reports and the US PCE price inflation. That is about it. So let's go in and take a look at all of our currencies one by one, score them from +3 to -3. Now I'm going to take Bitcoin here, and I actually want to just bring up a long-term chart on Bitcoin. If we stretch this chart out, I want to show you how long we've been in this area. The lower end of this range is going to be down here right at 60,000. This is a really good high base. This is just a solid high base pattern. Now, I always love to start out on longer term charts because it tells you so much about what's happening long term, the big macro view. If you just look at like this chart, or even, God forbid, like you come into a 1 hour chart and that's all you look at, you don't really see what's going on under the surface. You don't really see the big macro trends. So if you come up and you start with a weekly chart, you can see that, okay, this is where we are. We had a monster run from 40,000 to 70,000. That's a monster run. You should get consolidation. Anytime you get a monster run, you get these areas of consolidation. Here we are, areas of consolidation. There is no need to worry about Bitcoin because it is still technically in a high base pattern. It's just telling you this up move is over and it's just consolidating. Right here, right now, though, if you take a look at right here, right now, you've got to take a look at the momentum is to the downside, and you really shouldn't be expecting there to be any support. You know, I'll take one line right here, basically right where it is, and you can see today's candle is looking like it wants to pierce below that. This is really the last line of support before we get to, you know, let's just call it 60K. Maybe it's 60,500. Maybe it's a little higher, a little lower. But for me, where we are right here, right now, it's telling me there is no bouncing here. Now look, if we recover and we can put in some green candles and we can move up, like I said, I want to see a higher high and then a higher low. That's what I'm looking for before I can even get excited on Bitcoin and really any of the cryptos. So right now, I've got a -2 on trend, -3 velocity. There is no reason at all for me to be looking to buy here. Bitcoin Cash, -2, -2. Again, no reason. There is no momentum in these to the upside. If you really want to pick the best of the worst, is Ethereum. Ethereum's a -1. That's still not great, but it tells you when the buying comes back into crypto, Ethereum is likely to be the first mover and the best mover right when we get that turn. So if you are looking to buy a crypto here, again, it's not ready right now whatsoever. But Ethereum to me looks like it's the one that's hanging in the best. Hopefully you guys got my overall view of crypto. Look, I'm not bearish on it. I'm looking at this big range we've had. It's likely to come down to the bottom of the range. If it breaks the bottom of that range, then I will get bearish in crypto. I'll say, hey, you know what? We've seen how crypto moves. We have the big moves, and then when it starts to break down, you tend to give up 40, 50, 60, sometimes 80% of those gains. I definitely will be shifting more to a bearish stance on crypto. Right now, I'm just neutral on the medium term, bullish on the longer term, but negative on the short term. Okay, will you take us through the Forex?
Absolutely. Well, let's just start with some of the trend-changing moves that we're getting. And the first one, I want to start with the dollar here. And I talked about this last week, how this thing is just a range bound. And I'm not surprised. Like I said that before, I'm not expecting any downward moves in the dollar just because where we are with the central banks. At the same time, it's not breaking out either. So here we are ending the week at the top end of the range. So I like the way it's ending because I think there's a better chance for this to break out next week. So that's my first premise that I'm going into next week. It's light on the news end. The trend has now shifted from a 0 to a +1. I think the momentum is building up, and you can see on a 4-hour chart as well, things are just basing here. And I like the fact that it's not rejecting that level, it's just holding on that level. So my first premise going to be next week will be going for some long breakouts or looking for a breakout in the USD. On the other hand, the reason why I like the dollar so much is because take a look at it, the counterparts. The yen is just falling apart, and we see this carry trade working out over and over. As the other currencies become more falling out of favor, we see the dollar really holds up well. You can see -3 on both the trend and the velocity. And I think this will take us back to the dollar yen currency pair as well, because this is again moving in a direction that's what dollar will benefit from. Now, on the other hand, Swiss franc, well, guess what? That's another currency that's likely to fall out of favor with the central bank. So we've seen a big rally. The Swiss franc overall 2024 has been pretty, on the downside in the first 5 months, and then we had a big rally starting that in May, and we took us to this high. I think this likely to sell off. You can see on the 4-hour chart, we are moving the momentum to the downside. It's not aggressive, but you can see, seeing the buying coming in. So as a first level of pullback, I think this will pull back towards that where the 20-day moving average is. That's where the prior support was. So I think if we look at where the next big move, I think the next big move is likely towards that area. And at that point, the trend score will start to weaken, and I think we'll probably see a much more confirmation. But I like this on a 4-hour chart. If I'm wrong, I want to get out if it breaks above the exponential moving average or that the parabolic SAR. But I think I like this in the shorter term trade on a 4-hour chart more to the downside. So I like dollar yen, like the dollar Swiss franc if you look at those pairings. Now, if we get into some other European currencies, the euro, which again looked weaker because euro, we had another rate cut from ECB as well. So it seems like ECB and the Swiss bank are on the same path. But you can see because the Swiss franc was more weaker, we saw the euro hold a little bit better. But at the same time, has still making it a little bit low base here. So I still like this on the downside. Now, the big question is, do I want to go with the Swiss franc or the euro? I think I would rather go with the Swiss franc. So I'm just going to put euro on the side here, but I still like this on the downside here. As far as the trend goes, and velocity is just not there as much. Now, the British pound is another one that I had a lot of questions on because, this is something that was moving nicely, staying along. And here we are. We're getting that trend change. So we are in a trend score of 0. And we don't know if it's going to break lower or not. But again, this is where I would like to, put a trend down on that 50-day moving average. If it breaks below that 50-day moving average on the daily chart, I'd like to play this a little bit more on the bearish side. But for now, I like this more on the sideline. We'll see which way it goes. But I'm not really aggressive on the British pound here. I think there's better shorts there and there's better longs there. And this is where some of these currencies kind of get stuck in the middle. Now, in the other growth currencies, this is where, let's start with the CAD. And over, we get this CAD, which end up lining up with the USD. So if the US dollar is going to hold here better or break out next week, look at what's happening with the CAD. CAD is following suit. So, we have the inflation number next week. We'll see what happens. But I mean, take a look at it. We went from a -2 on CAD now to a +1. So this again goes a proxy trade with the USD. I'm no longer bearish on the CAD. I think this is likely to go higher. And look at a 4-hour chart, beautiful high base formation there. So I think this is something you'll be looking for a breakout early next week. Now, in the growth currencies, it left me a little surprised because here we are, Australian dollar, and we talk about how sometimes Australian dollar takes the lead and sometimes it's a Kiwi. For the last couple of months, it's the Kiwi taking the lead and not the Aussie. And you can see Aussie got a nice little rally here. And this, again, most of the rally took place after the RBA statement. So, again, they didn't cut at the same time. It was a slow, steady move onto the upside. But here we are. We are at the top end of the range. So as much as I like it on the trend score, I want to keep a close eye on that price level, support, resistance. We have a resistance right there. I don't like it long unless it really breaks out. And just like Rob said, with the Aussie CPI, this will be a trade worth looking at it more, both on the upside and the downside, depending on how that number comes out. But for now, momentum is there to the upside, but but right now we could see a little bit more sideways price action till we get the CPI number. And lastly, the Kiwi. And here we are. The saga continues back and forth. I mean, take a look at it. This is range bound as well as a +1. But I think this is range bound. So don't really love it as a long. Both Aussie and Kiwi, they're just either at the top of the range or this is the middle of the range. So I don't like playing on the long side unless we get a breakout above the resistance line. If things stays in the sideways range, that's where we want to be a bit more on the sideline and just really pick those currencies that are moving directionally up on the upside and to the downside. Back to you, Rob.
And I think the little bit of a risk-off move we've had in equities is keeping the lid on things like the Aussie, the Kiwi, and maybe a little bit the CAD. So for me, I really like how these growth currencies are looking, especially the CAD. The CAD has very much surprised me because I've had the CAD in the doghouse for a while, and just like you, the first time, I'm like, hey, this is looking like it's building a lot of momentum. If the dollar can break out, I actually like that CAD a little bit better. However, like I said, if this market stays, I'm going to use the term soggy. That's the term I've been using with our stock and options group over the last 2 weeks. It's been a little soggy. Like, yes, the AI plays like the NVIDIAs and the Microsofts, they've been doing really well, but underneath the surface, the rest of the market has really been more weak than strong. Even though the equity indices go higher, it's because all the big tech stocks are pulling them up, but it's soggy. So I don't want to be long Kiwi and Aussie and CAD until I get a nice rally in the equity markets. For me, that's what I'm waiting for on these trades. I love these trades on the long side, but I need that risk on move to come into it. My favorite currency had been the pound for the last couple of weeks or months, and I've got to put it on the shelf. It is not performing the way I want it to. So I like yen, I like Swiss franc, but Swiss franc is not there yet. So we're really going to have to take a look at stuff like euro short and yen short. And you can see what's moving right here, right now. You're exactly right. Dollar and CAD to the upside, and we'll go ahead and take a look at stuff like yen and euro to the downside. So those are the potential trades I'm going to take a look at, pairing up CAD and Aussie against things like yen and the euro. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? Right, I already broke down all the cryptos, so we don't need to talk about those. So I'm going to put my top trade, CAD Yen. CAD Yen is my top trade, and here we have just a really nice, strong breakout. Remember, we want to trade currencies when they have big candles, and we don't want to trade currencies when they have small candles. These moves right here are great moves to capture. They're easy trades because there's not a lot of pullbacks and you get nice expanded candles. We don't like to trade in these areas. These are tougher areas to trade in. So yes, we are reaching a resistance point. I would love to get a pullback and a bounce or a base on CAD Yen. I'm looking at this and I'm saying, look, I either need to be super short term, meaning I'm all about momentum. I'm going to get in now. I shouldn't say now, but I'm going to get in soon. And if the momentum keeps going, I'm great. The second it fades, I'm out. So I think you could either look at this as a shorter term trade where you're looking at it, hey, I'm going to hold this for the next day, 8 hours, whatever. But I think if you're looking for a longer trade than that, where you're looking to hold on for a couple days to a couple weeks, I think you need a little bit of relief off of the daily chart. Just give me a couple days of a pullback, a couple days sideways, and then a move out. I would be very, very happy with that. Now, again, that is just because the yen has been so weak, and I think the yen could get a 1 or 2 day rally, Man, that's what I'm waiting for. I'm waiting for the yen to get a 1, 2, 3-day rally. I'm looking to be short in that yen. So for now, I'm going to have to be taking a look at something like a Euro CAD. And you can see here the daily chart is so-so. The daily chart is so-so, but we do have a breakdown. We broke down below the 50, bounced up. We now have serious resistance on that 50. We broke down. We're getting this hammer candle here. I'm going to have to wait on this one as well. But look, all I'm doing is waiting for a bounce. When something's in a downtrend, you just want to wait for a bounce. So the line I'm looking for is going to be right here at 147. Well, let's call it 146.90. 146.90 is the level that I am going to be putting an alert out there. I'll probably put a 146.80. If it gets up above that, I'm now looking actively for a reversal candle on a 4-hour chart, a confirmation candle, then I can start to take a position. So for me, this is going to be my number one trade for the week. Euro CAD up around the 146.80 area. Ankit, what do you want to take a look at?
Hey, Rob. Well, a couple of trades that I'm looking at. I love the trades that you looked at, but the ones that I'm looking at is dollar Swiss franc. And remember, I'm looking at Swiss franc on 4-hour chart. So I'll look at the 4-hour chart for my setup. And again, this is what I like. I like that it's kind of making that, it broke above when we had that change, from S&B. So we just broke out higher. And since then, we based and we just went higher. So I like the fact the way it's moving 4-hour chart. I think there's more room for this to run. And I like the fact that, I'm getting a good risk to reward on this trade. You got a nice little range and breaking out. So this is the one that goes on the top of the list. Also, CAD Swiss franc going in the same line. CAD Swiss franc had a nice little run as well. Take a look at it. Right up against the resistance, making the high base pattern. We got a nice little breakout today, but I think this is where the risk to reward. If it breaks out higher, this can easily get towards the 66 area and putting in my stop right below that range that we had. So again, decent risk to reward. These are the trades that I like here, and just looking for that continuity as we go into next week. So that's what I have, Rob.
Thanks. And I want to take a look at that Aussie because right now, the CAD seems to have a little bit more momentum. And this is what we always like to do at Maverick. If you ever have a question of, okay, which currency should I go with? Well, pull them up on a shorter term chart. And you're going to see that right now, the Aussie is falling against the CAD. So the CAD right now has more momentum. It has more momentum than the Aussie. We could change this week, especially after that Aussie CPI. If we get that change where the Aussie starts to go up against the CAD, then I'm looking at more Aussie trades. And I really like Aussie trades as well. So we could take a look at Aussie Swiss franc. And this is just a beautiful pattern. This is on a 1-hour chart. But if we go ahead and take a look, you can see we're at some pretty key levels here. But I think we could easily make it up to this 60. And that's, that's 60 cents. So that's a 1% move to get up to that line. But we're going to have to wait and see for that Aussie to actually start to show some relative strength in the short term. So for me, CAD at the first of the week, Aussie maybe at the end part of the week. But again, I really do like these setups. I am completely uninterested in things like the pound. I think you can trade the dollar, but I think the CAD is going to be a better trade. I think they're linked together right now. And so if one goes up, I think the CAD goes up more. If one goes down, I think the CAD goes down more. So I think you want to play CAD instead of the dollar. This week we are looking for that breakout in the dollar, and we think that's going to pull CAD along with it to the upside. So these are the pairs that we like. Everyone have a great weekend. Thanks for joining us for the Currency Room. Goodbye, everybody.